It is your realtor, Dave, and I'm not only a real estate broker, I am a combat veteran. When it comes to helping my fellow brothers and sisters with real estate, I don't hold back. Now, today, we're going to be talking about one of the greatest assets that the VA home loan provides. But make sure that you hit that subscribe button first so that you can stay up to date on all the real estate news. And if you are looking for more information about the VA home loan, check out my channel. I did a 30 video series on everything the VA loan is and offers. Now, if you are a veteran and you're looking to sell your home, or you're a buyer looking to beat today's high interest rates, you need to know about the VA loan assumption. It is one of the most powerful tools in real estate, but it's often misunderstood. Simply put, a VA assumption is when a buyer takes over the existing mortgage. They aren't just getting a similar loan, they're inheriting that specific interest rate and the remaining balance of that monthly payment. Now, if you're locked in at a 3% rate a few years ago, that rate stays with the house. In a market where rates are much higher, having an assumable loan makes your home the most competitive listing that's in the neighborhood. Now, for a seller, this is a massive marketing edge. It helps you market your home and make it stand out and can lead to a much faster sale because the buyer is saving hundreds of dollars every month on interest. Now, for the buyer, you get a below market rate. The VA funding fee is slashed to just 0.5%, and you can often close without a new appraisal. Now, here's the catch. You are assuming the loan balance, not the home value. If the home is worth, say, $500,000, but the loan balance is only $350,000, the buyer has to bring a $150,000 difference to the table in cash or through a second mortgage. This equity gap is where you need to find the right buyer early in the process. This is the most important part. Anyone, including non-veterans, can assume the VA loan. But for the veteran seller, who assumes the loan changes everything. If a qualified veteran with their own entitlement assumes your loan, they can do a substitution for entitlement. This swaps their benefit for yours. Now, your VA entitlement would be fully restored immediately, allowing you to buy your next home with zero down. However, and this is important, if a non-veteran assumes your loan, your VA entitlement stays tied to the house until that loan is paid off, whether through refinancing or sale. This means you might not have enough benefit left to buy your next home with a VA loan. You're essentially loaning your military benefit to a civilian, and if they default, it's your entitlement that takes the hit. Now, regardless of who buys the home, never close an assumption without a release of liability from the VA. This ensures that once the keys are handed over, that you are legally finished with that debt and your credit is protected. Now, VA assumptions are a win-win for the right situation, but they can take 60 to 90 days to process and they require specific paperwork. If you want to know how to market your low rate to get your home sold faster, or if you're a buyer looking for an assumable deal, shoot me a DM. Let's make sure that your VA benefit is protected and you're able to market your house in the most effective way.